give you a snapshot of basically what has transpired in the last 1 week based on the budget. We have actually had the CS for Finance actually being able to revise the projects of the budget. Yeah, we had an estimate of the economy to grow between the 5 to 6% in the year, but based on what has happened in the global market, so we had to be able to readjust our growth estimate for the financial year from maybe from 6% to around 2% to 3%. Yeah, so I hope most of you have had a preview of it, because the issue of corona has actually really affected the economy, and Kenya, being part of the global economy, has not actually been able to be left behind by these catastrophes that has actually been able to affect us. Okay, and sorry. Oh, shit. Okay. So carrying forth, we can actually have a preview of what has transpired. So the government has intended to implement the stimulus program here, which is actually more anchored on the four pillars of the economic growth. That is what has been set forth by the president. So most of you are aware of the four package stimulus program that has been done by the president in terms to be able to revive the economy, which is now been set for the post-COVID-19 recovery strategy plan. Yeah. Looking at the budget itself, we are for the 2021. It's been said to be about 2.79 trillion. So that is the expected expenditure from the government side in terms of the financial year 2020-2021, and the government is. No, hello. Okay. I think there's some background noise that is coming from maybe from Alice. Maybe we can mute ourselves. Maybe at some point we'll be able to unmute ourselves to have the discussion. Okay, so we are discussing about the budget. So what we said for the year 2020-2021, we are estimating that the government is going to actually be able to expedite around 2.79 trillion, and we're expecting that the government is actually will be able to collect around 1.89 trillion. So we are looking at having a deficit in the current financial year of almost close to 840 billion in our financial year. So if you look at that, you can actually be able to see that the government is actually going to be taxed with a lot of measures to be actually able to meet its financial tax collection. So we expect a lot of measures that are going to be put in place by the taxman, that is a KRA. So we expect that the government is actually going to have to put in some tough measures to actually be able to meet some of the collection targets that have been put in place for the year 2020-21. Yeah. So we are also expecting that the government is actually gonna exercise a lot of its powers within the Finance Act in terms of borrowing. So because you see, we already talked about that there's going to be a deficit of close to around 840 billion. So this money, we expect the government is gonna exercise its capacity to be able to borrow this money, both internally and in the external markets, to be able to meet the shortfall in the budget. If you look at the current the previous financial year, the taxman was able to actually be able to correct around 6.21 trillion compared to what was the target that was set in that particular year, which was around 1.64 trillion. So the same case we are expecting to carry it forth in our current financial year. So we might have a lot of stringent measures that we expect the government is going to apply in this particular financial year. So as a point of note, so we are really expecting that the government is going to put in a little bit of student measures to be actually be able to meet some of the current financial year targets. So in terms of collection, we might see a lot of issues in terms of VAT and a lot of the Kenya government going out there to the companies to be actually be able to push for in terms of revenue collections. Yeah. Some of the key issues that actually really came out from the budget in terms of in, in, in terms of the budget, some of the key issues that we are seeing that came out top is mostly on the following issues, which actually because we related these issues based on our business environment. And if you look at the Kenyan environment, most of actually a big chunk of the businesses come from the SME. So we are going to analyze this budget in terms of the small and medium companies perspective of the budget. Okay, so some of the biggest issues that we are able to highlight from the budget in terms of the digital tax. So we have seen that there's a lot of high heated discussion that is also ongoing in terms of this digital tax, where the taxman is actually proposing to have at least a 1.5% of a tax that is intended to be introduced within the course of the year. So they have not yet put in the measures on how they are going to collect this money and how this money will actually be able to be transmitted back to the treasury. So it's a lot of discussion on that issue. We shall explore it more as we move on. So another thing that has also come to highlight is a private equity and venture capital in the farm within the economy, because what has been transpired, we have seen that we have a lot of companies that are actually being formed, private equity firms and venture capital firms, both locally, both internationally, that are operating in the Kenyan market. So the taxman has actually kind of formulated a procedure that is going to be able to regulate these venture firms. And we have seen that within the CMA Act, they have been given the powers within the current finance budget to be actually be able to regulate the private venture firms and the money transaction within these kind of firms. Yeah. And we talked about that we are expecting to have a shortfall. Actually, might be more bigger than what we expect. Remember, in the beginning, we talked about having a value close to 840 billion in terms of deficit that the government is expecting. So one of the key issues that has been brought in is the issue of voluntary disclosure. So the finance bill has actually been for 2020-21 has given in the room for businesses or business companies or business individuals to actually be able to apply for these these tax waivers. Yeah, because we see that in the beginning we have seen that we're operating with a very high budget that is close to 2.79 billion, and we have seen that we may have a close deficit of 840 billion, which may go high or low. So the taxman has also put some disclaimers in the budget where it has requested for companies that are currently suffering from some interest and penalties that have been charged on this kind of companies in before, that they can actually be able to disclose this information to the taxman, and they can be able to be disallowed for the penalties and interest. Of course, there must be some levels of payment that they may expect to pay, the principal amounts that they may expect to pay, so that they can actually be able to enjoy some of these kind of this kind of amenities that have been given within the current budget. Yeah. So in case somebody is having some interest and some penalties within his tax register, he can actually be able to have a one-on-one discussion with the taxman, and be able to see how they can actually be able to penalize these issues with the taxman, because the effective date is from January 2021. Yeah. So it's good to have a discussion with your accountant or your tax consultants and see how you can actually be able to um, disclose these issues and get these backdated issues sorted with the taxman, because they have given a friendly, 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 a fri room for maneuver so that they can be able to engage the business out there without any kind of penalties or harsh penalties being charged on these kind of businesses. So another issue which has also come out very clearly is the issue of TOT, which actually should have been started from the previous budget of 2019-2020, which was at 3%. But looking at the environment, to be able to create a very good environment for business to be able to carry on businesses, they have brought in now reduce the effect of from 3% to 1% of what we call the TOT tax. Basically, is a turnover tax, which is actually being calculated on the principal amounts, that is a sales account of any particular kind of a business. So at the moment it's 1%, and there are also modalities of how to be able to calculate this and transmit these amounts to the taxman, because it's being calculated like an installment kind of tax, where you can be able to pay within the given schedules of the 4 months, the 6 months, the 9 months, and 12 months of that particular kind of a calendar year. It can be the 12 months normal calendar year, or it can be the financial calendar year of your specific business or any other kind of businesses in the month. Because you find that some business have January to December kind of a financial year. You find other businesses have from March to Feb, others are from June to July. So depend. This will actually be able to depend on your kind of financial year. So, but you have to be able to submit these kind of issues on the 4th, the 6th, the 9th, and the 12th month, based on the date of your registration for this particular kind of the TOT tax. Another issue which has actually come out so clearly is also on the issue of VAT. Because what you realize, the taxman has also put a lot of stringent measures in terms of VAT for the year 2020 going forth. So a lot of issues have been revised in terms of some goods which were exempted have now come into the tax regime, and some which were zero rated, now they also come to the standard rate regime. So it's good to be able to review your businesses and see if you are exempt or you are zero rated before. Try to see if now you have come into the standard taxation rate for the VAT, because a lot of things have been put in, and a lot of expenses have also been coming to the VAT, which are basically not within the VAT regime in the previous financial acts. So it's good to have a preview, look around and see what kind of services you're offering, and are they been taxable before, are they taxable now, has the rate been changed. And in case you have any worries, you can also be able to reach us, and we can be able to explore in terms of what we can actually be able to help in terms of that capacity. Okay, moving on. Okay. As we mentioned that before, we looked actually on the VAT, because if you realize one of the biggest key drivers of the tax collection in Kenya is it mostly comes from the businesses people, and mostly it comes through the VAT, and sometimes to some extent it also comes through the payroll tax. But if you look at the VAT, has actually come under a very close scrutiny in the year 2020 to the year 2021. So anybody who is operating in the business in this particular regime, it's actually they need to keep more focus. They need to keep more eye attention on the VAT, because if you look at according to this VAT Act Section 17, they have actually put in some things which are very critical for anybody who is actually registered for VAT. Yeah. So if you look at some of the things that are very critical is the tax devices and the period between which you're actually supposed to file your VAT. Because in the previous years, people used to backdate the VATs and be able to file them within any specific period. But from the year 2019, 2021, and 2020 to 2021, you find that we have been given a very specific period upon which you're supposed to be able to apply to file your tax return, which is basically the 6 months window. So it's actually very good to pay very key interest on the VAT, because this is one of the key specific area that actually is giving a lot of businesses an headache overnight, and it's one particular area any business person actually needs to pay attention on. Yeah, because if you look, actually one of the key things which actually has been brought in by the KRA automation is the invoice authentication, where, for example, you have where your invoices have to go to the taxman to be authenticated actually before they actually go to your suppliers. So these are some of the key issues we need to look at. Some of other key issues is, for example, if you give your invoices to your customer, they are giving that mandate actually for you to be able to follow up with your the tax with your customer to ensure that that particular invoice has actually been filed by your customer actually before you claim that input tax on your end. If you look at in terms of VAT era, the taxman is actually really been putting a lot of pressure on the businesses to be actually the principal point of compliance. So before anything happens, you have to make sure your customer is filing before you actually file your returns. Because if you look in the previous last 12 months, you realize businesses have also been receiving a lot of VA, which is the tax assessments, which some of them are coming because of these specific measures which are now being put in through the 2020-2021 Act. So that is one of the key areas anybody in business needs to actually be able to really pay focus on, because it's one area that is actually giving a lot of businesses out there midnights trying to solve these problems. Yeah. So it's a key concern, and it's a key area that we think businesses should actually really put their attention on this area in terms of ensuring that the invoices you send out are getting filed. The ones you are receiving from your suppliers, you're filing, and you're filing them within the limits of the bill that has been given and about this. That is a 6 months grace period that the taxman has actually been able to give to suppliers. So if you have invoices for January, we're in June, so that means all the invoices for January needs to have been filed within now this specific month. Now beyond this month, the system will actually not be able to accept those kind of invoices, and in terms of that, you actually be able to put a lot of tax burden now on your supplier, because the supplier now has to get a lot of VA analyzed, and to some extent, then taxman may demand that these invoices have now to be taken for what we call the invoice approvals through the systems of the KRA. Because if you notice, for the couple of last 2 years, the taxman actually has put in a lot of technology, including AI, that is to be able to analyze this information much faster, and to be able to put communications to the businesses out there to ensure that there's a lot of compliance. So this is one area that any business should put concern on. Okay, we'll get to explore more on this issue as we move by in the question series. Also, there's also another aspect which we mentioned before, which we talked a little bit on the digital marketplace. We realize the technology has really evolved, and the taxman is also trying to catch up now in terms of putting tax measures in terms of the tax that is being in tax of transactions that are being done on the on the electronic device, on the digital media, on platforms that are driven by technology. So one of the measures is that the taxman is actually pushing to get into this space, and this is not really happening alone in Kenya. If you look across the global marketplace, you find so many companies, or so many regions and countries are also getting to this digital market taxation. So if you look at Europe, you look at US, you look at any other regions, you find that there's a lot of suits, there's a lot of legal battles between companies and the government in terms of these issues of taxations. So one of the key measures that I think the government is trying to come into play is to put in the digital tax, to be able to have more base for, because they are trying to expand their base for taxations. So one of the key areas that has come to the limelight is the digital marketplace. You find a lot of us in Kenya. We are doing a lot of businesses across platforms. You find so many businesses done on the Facebook, on WhatsApps, on so many other kind of digital platforms. So one of the key issues that has been brought in the finance bill of 2020-21 is digital taxation. Yeah. So if you look at the bill, it has actually proposed 1.5% tax on the income from services accrued or derived from Kenya through a digital marketplace. So what means accrued and derived means you don't really have to have a physical presence from Kenya itself. Let's say, for example, we take a company, maybe the company is a US based company, and let's say it has an operations in the US, but it has their services are able to be it's able to drive some incomes from, let's say, from Kenya. So what the taxman is trying to say is let's say all the money is that is actually being or incomes that are being derived by these companies, despite them not being in Kenya. So the taxman is asking, how can I actually be able to tap into to these services that are being offered to Kenya citizens, despite these companies not within the tax regime of the Kenyan system. So that's when I've gone ahead and be able to say, let's put it at 1.5% of all the incomes that is actually being derived from Kenya uh, by companies that are not really operating in the Kenyan space, because most of the Kenyan companies that are operating physically in Kenya, so those falls under the different tax regime. That's when we talk about the VAT tax regime. So those companies in Kenya, they follow under that act. But now you find out there's so much advancement in technology. You find even a company without having physical presence in Kenya can actually be able to drive a lot of big chunk of incomes from these other countries where they don't have physical presence from. So, and that is where now this digital taxation is coming into play to be able to cover this space which is not being covered. So one of the issues is that there's the introduction of the 1.5% of the digital tax now, which is actually being done on, let's say, for example, on 1.5%, which is now the proposed, which has been proposed by the CS Finance. So what is they're saying is they're going to tax this 1.5% on the gross transaction. So let's say, for example, let's take a good example, like let's say like Netflix. For that case of an example, let's say you pay for maybe 1,500 shillings in a month. So what the government is saying, they want 1.5% of that 1,500 paid by every consumer in the marketplace. So that is actually the whole essence of now be able to tap into that money which the government initially without the previous provision was not able to tap into now to that marketplace. So what has they have gone into play is um, now they want now to be able to tap into that money. So the modalities of how they are going to do it and how this money is going to be captured and how it's going to be transmitted to the treasury or to the taxman is still an issue under discussion, and we are yet to see how the government is going to play to be able to make sure this taxation actually really works, because the policy and how it gets implemented is actually two different issues, and maybe it may even go further than what we expect, because now what the discussion in which is there is more of global companies having no physical presence in our region, but get driving a lot of incomes in this specific geo. But you may find that they may expand this marketplace to stretch it also further, because it also talks about things like other business that may actually be able to target people who are selling tickets online, people who are doing software programs, people who are doing web hosting services, and then other digital contents. So anybody who is also selling like applications, digital content, ticketing, and those kind of web hosting services. Because you find a lot of businesses also they are doing those kind of businesses which remotely they are not still falling under the VAT Act. You find somebody is I'm a consultant in Kenya. Maybe I'm selling let's say AWS cloud applications. So these are our services that can actually be able to be offered from anywhere. But what the government is saying is, as much as we're offering these services and we don't follow within the VAT Act, what we need to do, we still need to get into play and be able to take a percentage of these incomes, which is the gross incomes of the total sales, and submit some of these monies to the treasury, because we are looking at 1.5% of this money now being transmitted to the taxman. Let's say, for example, because maybe what we call it, maybe a generation. Say for example, I work from home. I'm not a registered business, but I'm a global partner. Let's say of Google. Maybe I sell Google services to other consumers in the market, and I'm not registered for VAT, and I'm not registered for TOT. So what the government is saying, because this does not apply, why don't you now be able to register within the digital taxations, and you get into the space of taxing yourself now within the 5%, the 1.5% of the value that you're driving by doing these online transactions. It's gonna be a headache, most likely from the point of disclosure, from the point of transmission, and for the point of filing these taxes. So we are still following it up and trying to see how it formulates, how it get resolved, how it get transmitted, and how it's gonna be paid to the taxman. So this is one of the issues. So in case you are doing any businesses online, or you are selling any companies solution or partnership in companies outside the Kenyan uh, outside the Kenyan region. So it's one of the key points you need to really look at in terms of seeing if it applies to you, because what is how it gets applied to you, and how you're gonna be able to transmit these monies. Because if you realize in the last couple of years, the taxman is also getting very wise, and if you've been following across, you can actually be able to see that the taxman has been given a lot of leeways by the court system in Kenya. So they are actually able to like follow up some of these in terms of digital payments, and also in terms of a banking transaction. So it's in and out of, but we are looking and see how it all pans out at the end of the day. Okay. Okay. Now, anybody with a question, we can review a few questions. Any questions? Pardon? Any particular question from the participants? Or something you'd like us to have a look at? All right. In case there are no any other questions, maybe we can we can see what we can actually be able to, because we wanted to have 30 minutes discussion and 30 minutes presentation, and then we can actually now be able to have discussion points. But it seems like the participants today don't have any specific questions. Okay.
Elaborate more on digital taxation. Tax Netflix.
Okay.
Jumia.
Okay.
Tax all these other products?
Because when you look at the digital tax here, what is mostly lacking is you realize the digital marketplace is a big market, and the taxman has not been able for the last couple of years been able to tap into those transactions which are actually being done online, both by our local-based companies and international-based companies. Um, you find that the taxman has not actually been able to tap into that market, and the taxman has actually realized that actually there's a lot of money in this space. So that's why the taxman has come in and said, how can we adequately be able to tap into this market? So that's when they went back and sit down, and they came up formulated the digital tax, which they put it at 1.5% to be able to tap into this market. But as I said from before, how the market is actually been how the bill has just been proposed on the tax that is going to be taxed on these businesses. They have not yet come out with the modalities, and the modalities on how they are going to tax it and how they are going to get this money collected from this business, and how the business are going to file in these taxes. So what is actually at the moment is just we have the bill and the proposed tax, but in terms of the procedures on how to be able to collect this money, to be able to file this money and make payment for this kind of transaction is actually not yet the taxman has or the minister has not yet been able to come clearly on how this is going to happen, because it's still a topic under discussion. And we are hoping in the next coming few months or weeks, the taxman is going to come out with a policy on how we are going to capture this tax and how we are going to transmit tax back to the taxman. So that is it's a in out here, but we are following up to be able to see what really transpires after this transaction. Yes.
There's a question in the chat.
Okay. Let me see that. I'm not able to see that. Yes.
It's how are they planning to tax digital service providers selling from Facebook? And how do I pay the service provider?
Okay. As I said, because if we realize that a lot of most companies that may come and preview is international companies, let's say Google, let's say Facebook, let's say any Amazon, any other related companies. What is the government so far has done is that it has only given them a date for within the tax bill of the tax that is likely most going to be used by the taxman, but the procedure of how this is going to be done is still what is we are putting under review. So that is what we are following up to see how the procedure is going to be done. So from the point of taxation itself, from the point of collection, and from the point of transmission of this money to the taxman, back to the taxman. So that is still a topic and a discussion, and there's a lot of lobby going on in terms of the applicability of this specific kind of taxation here. So there's a lot of lobbying, there's a lot of negotiations, and there's a lot of boardroom discussions to be able to see how is effective is it, because it can also lead to other maybe double taxations or those kind of issues. But we are trying to see how, at the end of the day, what is the procedure, what is the taxman going to, and how it's going to play out at the end of the day. Yeah. So those are some of the things that we are really following up to see.
So companies like this delivery food company.
Oh yeah, that we said the app companies, ticket companies, definitely those companies are they are going to be put in a lot of limelight, because when we begin, we say the taxman is actually facing a lot of money that may not collect, what you call the tax, the deficit, the tax that is between what is budgeted and what the taxman is looking to collect. We say there's a huge, almost 800 billion. So the taxman is gonna be very aggressive. The taxman is gonna push to the limit. So we are waiting to see what is the response from their end, because they are just given a hint this is coming, this is how it's going to be done, and this is how we are looking at it. But they are yet to be able to share how they are going to be able to now automate the whole procedure of collection to transmission to the payments back to the taxman. Yes. So this is an issue that is, I'm sure a lot of companies which are involved in this space are really doing a lot of lobbying and a lot of boardroom discussions. And
LinkedIn.
definitely from Google Ads, from so many, because the market space in itself is actually it's a huge market, and a lot of transaction are actually happening on the in those platforms like ticket booking, event booking, things like the webinars we are holding online. Yeah, for example, if you take for example, we are using an online market space, we are using Zoom, so we must have paid some money to those companies to be able to use these platforms, even though they are not in our regions. But we are transmitting a lot of revenues back to those companies. So the taxman is asking now, how can we be able to get a chunk of these monies which citizens are paying back to these companies, and be able now to get a little bit of revenues here and there, without causing so much chaos in the market. So that's why you see they have not put a very huge value on that those specific kind of transactions. Because if you look, the 1.5% is almost close to what we are doing for the TOT market, yeah, which is the TOT now applies to those small businesses, the SME businesses in Kenya. So it's more kind of the government is treating these companies of not so much with the heavyweight kind of taxations. Because if you look between other global market, you may find that Kenya has actually reduced a very favorable and fair um, tax rate for global market space. Yes. Okay. So other things that we found from the budget that they are actually may of importance is to look some of the ways government is looking to spend their money, and some of the ways that technology companies can actually be able to explore. So one of those is the government shared services. They have really put a lot of money in terms of that. There's almost a billion. There's also the digital literacy program. It is also a very good place to actually see what you can actually be able to play with that marketplace. And one of the key issues is that the government is actually very boosting this global digital marketplace. You can see we are rehabilitating our national just 1 minute. Okay. You can see that the government is actually rehabilitating the national optic fiber cable, because now they are doing the phase 2 expansions now to be actually have more speed, more fast transaction, and the more bandwidth. Because now with this now, because we find a lot of those technology companies are also expanding at a very high rate, and the infrastructure needs also to move also fast to be able to cater for those companies. So the government is not just taking; it's also giving something. It's more of a win-win scenario, both for the consumers and both for the market itself. Because they're not just taking and not giving something back in; they're also taking and giving. So it's more of a win-win scenario if you look at what is within that specific bill, which is the 2021 budget. When you see the government is actually investing 1.2 billion in terms of now rehabilitating that phase 2 of the fiber optic, which is now our national. It's more of like our national grid, like we have for electricity. Now this is also our national grid for like the internet services. Yeah. So we are looking at it from two specific key areas. We are looking at them being able to collect a little bit of the money from the digital marketplace, and also spending some of this money to be able to boost our infrastructure in terms of technology. So yeah. So another thing which is also very key, and which a lot of companies have it has not caught up their mind, is actually the Konza Technopolis city. We had a little bit of visit of the city. It's actually a world-class set of a city, and a lot of companies are going to be able to enjoy this specific benefit of the Technopolis. So if you haven't found the opportunity to preview of it, it's something that we really found it's something that anybody in the technology space needs to have a look at. And you can see a lot, the government has put a lot of money, almost to 6.3 billion, which has been put to in the phase one of the budget. Yes, which is, it's basically a lot of money, yeah. If you look at it in that kind of perspective, because 6.3 billion it's a good investment for a technology city. We have never had one before. Before we have had things of manufacturing cities, which we call them the EPZ. But now the government is also boosting the future of technology, and it's also putting up now the Konza city, which we call the Savannah city, and 6.3 billion is going to that project. Borrowing, no, we have not really borrowed a lot of money in this financial year because we said we have a deficit of close to 100 to 800 billion. It's, in terms of layman structure, it's a lot of money, but if you look into the government way of operations, 800 billion it's a fairly good amount of money because we have done worse in previously, but I think we doing good. Because at the end of this, money gets to the development of a country. Because if we don't spend, we don't grow. If we don't spend, still we don't grow. So we expect the government to be able to make a few borrowing here and there, both internally and in the external marketplace. So what is happening? May borrow. We leave a look at the finance bill. 50% is coming internally. 50% is coming from the international capital market. So we may find a lot of FMC, World Bank, and another other kind of related institutions advancing some of these credits back to our financial markets, which basically creates a lot of liquidity. And I think liquidity is actually good for businesses. Okay. Yeah. So as we mentioned, we can see the Konza city is it's a lot of money is going there, and it's not creating a lot of buzz. Unfortunately, from our discussion with the guys as the Konza Metropolitan, we find that it's not creating a lot of buzz within the Kenyan the Kenyans entrepreneurs and technology-based companies, and this is actually their place to be. So a lot of guys who are actually paying interest in terms of this is more of coming from international companies. Yeah. And not really big companies, but international companies. Some of them are actually pretty small. Some of them are Indian companies. Some of them are US companies. Some of them are European companies looking to invest in our market space. So it's a good thing as also investors within Kenya who are basically our local investors to also look at that space because a lot of money is going there, and it's just been going there for a reason. And I say the early bird catches the worm. So we hope this also happens in for our local investors also. Okay. Any other questions that we have from? Okay.
The 1.5% tax is for any online service provider. So I mean, if I have an e-commerce and I sell my products online that are vatable, does it mean I will pay the 1.5% for e-commerce and 14% VAT for my products?
Basically, that is not the case. So the case is applies to companies that are not under the VAT regime. So if you're under VAT regime or you're under TOT regime, so this may not apply to you. This is applied to the market space, which is already not tax, is actually applicable to those specific companies. So if you look companies like those guys who are doing ticket sales online, those guys who are promoting their companies online, those you find some people are doing their shows online. You see, those market space are not taxable. But now the taxman has come in now to be able to put
YouTubers.
Definitely.
YouTubers,
Google ads, LinkedIn adverts, and those kind of issues. So those are the market which are being put under, and the taxman
eye. If you have a YouTube channel, you have to register with the taxman.
Yes.
And then you pay income tax or you pay
what the finance bill has proposed a 1.5%, which is actually a final tax. So to that extent, they've said once you pay like this 1.5% becomes a final tax for mostly looking at international companies. But you see, as per the act of the Finance Act or the employment laws in Kenya, there's now that all the incomes earned and generated in Kenya At the end of the day, you have to declare this income, and they have to be taxed at the taxation rate that apply for both employment or corporate taxes. So mostly, FINO Act may apply for companies without a global presence in Kenya. But you find now you have to declare your end of the year, which you call the end of the year P9 or P10, those kind of taxations. And on the corporate taxes, 30% may apply.
So what happens if, for instance, we say Jumia is now going to go into this bracket?
Yes.
But I understand if it's a Kenyan company, it must have registered for tax.
You find these companies which are already registered in Kenya, and they fall under the VAT Act.
So they must be paying VAT.
Yes, they must be paying VAT to the Kenyan government for all their online transactions. So the deliveries and those kind of things, you find they may be paying those kind of taxes. I'm not very sure, but that should be the arrangement. But you find some companies are being registered, like for someone registered an application. Let's say I may not have been registered physically as a company, but I'm able to offer that services. For example, now let's take a very good like if you look like these online ordering apps, like where you just go order your beer, and then somebody just interlinks between the consumer and the producer. So him is able to just capture like a delivery fee, but he's not within any tax environment. So that guy is now who we are bringing into the 1.5%. Yeah, so we are waiting for the treasury and the taxman to be able to come up with a clean policy of how to apply this, how to tax this, and how to remit these the 5% taxes back to the taxman. So it's a watch and see space, and we're really hoping they'll give a very clear picture of what's going to happen. So we expect in a few months between now and maybe August them to have come up with a clear policy of what we expect to transpire in that digital marketplace. Yes, but if anybody is within that market, it's good to have a really good preview of that space, because you realize a lot of young guys. Let me put it in that way. The gig market, we call it mostly the gig market. You find a lot of gig market is not taxed. You find my job is I'll come, you'll just have an application somewhere where you can just request for my services. I come collect maybe delivery of these letters or delivery of goods and services online, or you just book my services online and come pick it, takes the next person. But I'm not registered for anything. You just maybe submit maybe on a cash transaction or M-Pesa transaction, or maybe credit card transactions. But in terms of physically, this money doesn't go to any corporate entity. So that is one of the big space that the taxman might look at. Yeah. So the gig market is actually what is coming also to focus.
So for layman, when the budget was right,
yes.
Which department or which part of the government received a lot of allocation? So much money.
Most likely, health is the four pillars. If you look at the presidential four pillars, which is the health, infrastructure, manufacturing, and I think housing. Those are very key important pillars to the president. And if you look at the budget, you'll see a lot of focus is also being put in terms of promote the Kenyan economy. Buy Kenyan. You have seen a lot of campaign that's being done between the Buy Kenya, Build Kenya, Buy Kenya. Yeah. Yes, so a lot of the four pillars is actually been promoted a lot, and technology also has come into play as a very key enabler of the economy. So you've seen a lot of money also moving within the technology space to be able to promote a lot of guys who are doing those kind of space. Yeah, you find a lot of being done within the gig economy, because the government is also trying to promote the gig economy. Yes. So it's been put a lot of focus. So it means it's something. If you see government paying attention to a space, means there's a lot of going in that space. Yeah, and they must, before the government to put attention to that space, definitely there must be money in that space. So those are the two things which has brought this the whole of these digital taxes to under the preview. Yeah. Okay. Yes. So we are really hoping, and we're operating in hard times. So the tax issues are they gonna be a lot of pain in a lot of businesses. So it is good to put all these taxes in, uh, in in good place, because for certainly the taxman is gonna be a lot of stringent in terms of application of his method for collecting taxes and ensuring compliance of taxes within the Kenyan market space. So we are hoping that Corona will come and go, and things can get to normal, and we can carry on with our businesses, and we resume back to our normalities. Okay. Unless we have any other question from our participants, we might have to come to an end of our webinar. So unless anybody has a question, you can put them across. We can, or somebody wants to say something. This is you can share. We can have participants have 2 or 3 things to say.
Also tell us more about the company.
We spoke about the company in the beginning. So we said our company is called Lloyd Cooper Consulting Group. So we are basically in the space of audit, taxations, technology, and a lot of project management also. So in case also you may need our services, you can actually reach us, and we'll be actually be able to assist you across any of our services that you might require. All right. So in case you have any issue, any problem, or anything that you missed, you can drop us an email, and for sure we'll be able to respond back to you in the course of the day or within the course of the week. Yeah. So any burning issue, anything in particular, or in case you need an extra webinar to clarify on more issues that we discussed today in terms of the digital tax, in terms of the ventures and capital and the capital firms registration, the CMA Act, in terms of how these things gonna be regulated, going back to other issues of VAT and applications, transmissions, and the Procedures Act, we can actually be able to uh, have a whole view of all these issues.